Today, we're taking a deep dive into LS2 Holdings. They've just released their latest financials and, at a glance, everything looks pretty solid. But when you start digging in, you find a really fascinating story about how they're actually boosting their bottom line.
And this right here, this is the number that's grabbing all the headlines. A massive 23.2% jump in net profit. I mean, that's a fantastic result no matter how you slice it. But it also makes you ask the big question. How on earth did they do that? Was it just a huge surge in sales, or is there something else going on under the hood?
All right, so here's our game plan for today. We're going to kick things off with that headline result. Then we'll look at the revenue engine to see where the money's coming from. After that, we'll solve what we're calling the profitability puzzle. Then, we'll check out their financial foundation and wrap it all up with a look at the future. Let's get right into it.
Okay, first things first, the headline result. On the surface, the numbers paint a picture of a really solid year for LS2. But like we said, the real story, the interesting part, is hidden just beneath those top-line figures.
So let's get into the nitty-gritty. Revenue was up 4.7% to $71.8 million. It's pretty decent growth. But, and here's where it gets really interesting. Take a look at that profit. It shot up by over 23%. So how does a less than 5% bump in sales lead to a whopping 23% explosion in profit? That is the puzzle we are here to solve.
Right. So to start cracking that puzzle, we've got to look at the revenue engine first. Where did that extra 3.2 million Singapore dollars in sales actually come from? Let's break it all down. Well, when you look at how they make their money, one thing just jumps right out at you. Cleaning services is basically the whole show. It's almost 96% of their total revenue. The other businesses, like integrated facilities management, that's IFM, and pest control, they're really, really small in comparison. So it's clear LS2's success pretty much lives and dies by its cleaning division.
And you can see here where that growth came from. Yep, the core cleaning business did the heavy lifting, bringing in an extra $2.5 million. But what's also kind of interesting is that their smaller segments, pest control and IFM, they also chipped in with some nice growth. So, while the main engine was chugging along, all the other parts were firing too.
So, we've confirmed the revenue growth was solid, but let's be honest, it wasn't exactly spectacular. And that brings us right back to our big question. How did a pretty modest increase in sales manage to create such a massive jump in profit? It's time to find the answer.
Yeah, this visual just lays it out perfectly, doesn't it? Revenue nudges up by just under 5%, but profit absolutely skyrockets by more than 23%. So clearly, the extra sales alone can't explain this. If it's not from selling a whole lot more, then where did all that extra profit come from?
And here it is. This is the secret sauce. The story wasn't about selling more. It was all about spending less. We dug in, and it comes down to three key things. First, they slashed their procurement costs, think supplies, materials, by over 15%. That's huge. Second, they paid almost 30% less in interest on their debt. And third, they just ran a really tight ship on their day-to-day operating costs. This is the key to their profit boom, just really smart, disciplined cost control. That kind of impressive cost control doesn't just make for a good headline one year. It actually strengthens the entire company from the inside out. Which brings us to their financial foundation. Is this a company that's actually built to last? Let's take a look at their balance sheet. Okay, before we get into the numbers, let's just quickly get on the same page with the term you're about to see, net assets. The absolute easiest way to think about it is like your own personal net worth. You just take everything the company owns, all its assets, and you subtract everything it owes, all its liabilities. What's left over is the net asset value. And a growing net asset value is a fantastic sign of a healthy, strengthening company. And the numbers here show a really positive trend. LS2's net assets grew by more than 15% in a single year, up to $23.8 million. What this means is that fundamentally the company is stronger and more valuable than it was a year ago. They are building a much more resilient foundation for the future.
And here's another key part of that stronger foundation. The company has been very actively paying down its debt. Total borrowings dropped by over 34%. Now, less debt means less risk. And as we saw just a minute ago, it also means lower interest payments, which directly fueled their profit growth. It's just a fantastic sign of smart financial management.
So let's connect the dots. When you're making more profit and you're paying off your debt, what's the natural result? A whole lot more cash. LS2's cash reserves jumped by an incredible 54% to $7.7 million. This is so crucial because having that much cash on hand gives them amazing flexibility to invest, to handle any downturns, or even to return money to shareholders. It's a huge sign of a very healthy company.
Okay, so we've seen the impressive numbers. We've got strong growth, we've got fantastic cost control, and a financial position that looks, frankly, rock solid. So what does all of this mean for the future of LS2?
So, let's just quickly recap the key takeaways. Revenue is growing across the board. Profitability has shot through the roof thanks to that smart cost management. Their balance sheet is stronger than ever, more assets, less debt, and as a result, they're sitting on a growing pile of cash. It's a really positive picture all around. And all of this leaves us with a big, forward-looking question for anyone watching this company. LS2 has proven it can run its core business with incredible efficiency, and now has a much stronger financial base and a lot of cash. So the question is, what's next? How are they going to use this newfound strength? Do they double down on cleaning? Do they look for acquisitions? Or maybe they get more aggressive in expanding those smaller segments? That's the story we'll all be watching in the year ahead.
Thanks for joining us for this explainer. And just as a final reminder, this content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.